Good afternoon. We're having a look now at the weekly S&P chart, and you can see for the past 3 weeks we've seen a bounce back up towards 2600. Now it hasn't broken 2600, and it tried twice last week to do it and failed. And even though we closed up, if you can see here, you can see that 9 weekly moving average coming in around about at this area here, which is at the 25.99, which is the high of where we saw this come to last week. Now, in failing to break through 2600, you've put a little bit of pressure on the downside, and already this morning we've seen overnight moves down to 25.73 as we speak at the minute. Now, I do think that the market is under pressure. I think it's got to take out 26.05 for it to take any chance at all of reaching our level that we had last week, which comes in at 26.27. If you look at the weekly and the monthly pivots, they're both at around about the same level. You've got the monthly coming in at 25.50, you've got the weekly coming in at 25.46. So really that's about as far as you can go on the weekly. You have got the indicators that are turning up higher, but if we go over to have a look at the daily chart, you'll see a bit more what I mean. Now, give it its due, it did try really hard on Friday to break up higher. Again, it failed in this vicinity, what I was saying to you at the 2600 area. Now, the reason of having 26.26 as a level is, you can see here, it is the daily 61.8. Now, when you have such a small move as we're taking from the beginning of December, markets can quite easily retrace back to the 61.8 level. You know, we're not taking in the big move from its all-time highs. We're only taking in the last month of December and January. This is all we're doing. So when you get a move like this, you can go back and you can test this area. If we do see a break above 26.05 today, that 26.26 is where we're going to be heading. We're going to be sellers there, and we're going to be putting our stop above the 55-day moving average, which today is coming in at 26.39. Now, if we cannot hold that weekly pivot level, and we open where we are, and we go below 25.89 and stay below 25.89, then obviously the pressure's going to return to the downside, and you will then see the market come down. And I think we're going to be testing around this area here, which is catching the 9 and the 21-day moving average, which is coming in at 25.44 and 25.27. I think that really should be enough short term on the downside, and I think you're going to see people coming in and taking profits at those lower levels. Keep your eye on that 38.2, which is coming at 25.19. We know that was a level, a swing level, as because when we broke up, that was a level we had to take out to keep going. We did. We haven't quite realised that 61.8 yet, but you know what, S&P isn't out of the woods yet. Look at the indicators. The daily stochastics are overbought and beginning to turn lower. The RSI is already turning lower, and our ROC is flatlining but above the 0 line. So that really needs to start to break down before this market will motor on the downside. So those are the levels that we're looking at today. As of Monday, you know, you don't really do too much on a Monday. It mainly is a day to just sit there, watch it, what it does. See if we can have a look at the closing gap, which we can see on our Friday close came in at 25.96. Let's have a look and see what Wall Street does when it opens. Good luck. I will talk to you tomorrow.